definitely would love to ask you a question on the markets.
Perfect.
Yes. So we now are in great suspense to know your take on what is going on in the crypto market. We've had kind of a buildup of suspense here. So past few days, you've seen a bounce. What's it about?
Absolutely. And for right now, at least over the last 3-4 days, it all has to do with the rhetoric between the U.S., China. What happened with the overall market? Was there more tension, more volatility? Was it risk off a little bit? So, crypto has really traded almost hand in hand, if you will, with the Qs, with the NASDAQ for pretty much the entire year, for about 9 months. Now that disconnected a little bit, just a little bit. But if you look at the rally, off of 20,000 to where we are now, that coincides right with the NASDAQ, right with where the Qs are. So I think just the last couple days, the sideways action we have, or if you will, the little bit of a sell-off we had from 24,000 on down, it was just a little risk off as the overall market was. But to me, if we get through the rest of the earnings season here, if the Fed does not pivot, when I say does not pivot, right now they've taken the pedal off, or they've taken their foot off the pedal a little bit here. They've reined in a little bit, regardless of what they said yesterday. They've reined in a little bit interest rate expectations here. So I think that is bullish for crypto here. I'm not so sure that we don't test that 20 or 21 level again, but this 24,500 level in Bitcoin or so that we can't get past, that's serious resistance. So it's going to butt up against that again. If we can get through that, it sure looks like there's probably another 10%, maybe up to 27 or so in the very near term. But again, you've got to watch the overall market. You've got to watch the way the NASDAQ is trading. You've got to watch the Fed, because that's really how crypto in general has been trading.
So Scott, though, there's another thing that's going on here that I would argue probably has less to do with geopolitical events, which is the recent surges in Ether. What is that about? What's going on with ETH?
Well, there's some upcoming news here. I think it's the beginning of September, right, about what's going on with Ether and a new protocol. So I think there's a lot of anticipation about that. And also, if you look at Ether, if you look at the overall Bitcoin to Ether or Bitcoin dominance, Ether was kind of left for dead. I know crypto in general was sold off, so heavily, but Ether was kind of left for dead. So I think this is a lot of catch up there. We're looking at, this thing has rallied from just right around 1,000 or sub 1,000. I think it hit at its low point to right now around 1,660 or so. You're looking at a massive rally. I think we may start to unwind that a little bit as we get closer to this new protocol in September. Unwinding doesn't mean Ether is going to go down, but I think that the potential for Bitcoin as compared to Ether over the next month or so is a little bit better.
So I kind of want to go back to this discussion you brought up about the Fed, but it does seem that what was said yesterday was pretty hawkish. No, I mean this idea that inflation hasn't yet been fully reined in, and that they may need to keep going with raising the Fed funds rate. And, again, they also do have kind of another arsenal we keep forgetting, and that is this massive balance sheet. Once they start unloading some of their bonds there, that could also overall raises the interest rates in the entire market. And if they really do fear inflation, they don't just have to raise the Fed funds rate, they could also sell those bonds. So, isn't that still kind of looming over the entire crypto markets, that in fact, and the entire markets in general, that they could bring about this higher interest rate, and they could throw water on the economy if inflation keeps going?
So is it hawkish compared to where it's been over the last week? Yes. Is it hawkish compared to where it's been over the last 3 months, 6 months? No. You got to remember, it were just a week or two ago, maybe 2 weeks ago, that we saw the CME FedWatch tool, which closely monitors hand in hand with potential interest rate adjustments. We saw not only at the July meeting, a 1 full point interest rate hike at about a 90% probability, but we saw a 75 basis point hike in September at about an 80% probability. We got the 75 points in July, not one. And now that rhetoric for September, or that probability for September, has now dipped down to only a 50-point hike at about a 60% probability. So even with what the Fed said yesterday, okay, I compare that to where we were a week ago. So that may be a little bit hawkish, but overall, the tone has absolutely changed. I've been on record saying for about the last 3 months or so here that by the time we get to first quarter of 2023, the Fed's going to be pivoting and we're going to be lowering rates. I still stand by that because the economic numbers that we have been getting over the last month, 2 months, okay, which many of them are lagging indicators, not leading indicators, have been weak. They've been really weak. And I think the market is finally catching up to that. And I do not see them pivoting back to a hawkish stance. Yes, excuse me, we need to see inflation come down. It's just not coming down yet. But we kind of got a report yesterday with the JOLTS report. That could be the first look at the jobs, at the whole entire employment situation, which has been holding up this market. If we start to see that pull back, and we'll get a look on Friday at the July jobs number, okay, that is going to lead into the narrative of they can't be as hawkish.
You know, perhaps adding to that are these China-U.S. geopolitical tensions that are rising, you know, with House Speaker Nancy Pelosi visiting Taiwan. And I wonder what you make of that whole situation. There was some concern that it would put pressure on markets, but markets are on the rise today, at least in the crypto markets. And there was also concern that, you know, with Taiwan being such a big player in the semiconductor industry, that, you know, if there were any global supply chain issues, that it would really impact that area.
So we don't really know what the long-term outlook is going to be from what happened over the last couple of days. There was a lot of consternation about this visit. Markets were getting a little bit more volatile. So far, short-term, short-lived here, it seems like, okay, she was there. China's imposing, you know, some sanctions here, not the end of the world. However, we really don't know what is going to happen down the road here. Yes, I do believe there's still going to be some supply chain issues here. Semis, other electronic components, you know, they're the biggest contributor by far to imports from Taiwan. So that is an issue. However, on the flip side of that, I believe that Xi cannot risk further destabilizing his economy. Factory activity is shrinking there. The economy is shrinking there. Even though it seems like, you know, maybe the latest lockdowns and the latest COVID outbreak is somewhat under control, which is a good thing, he cannot risk that. He cannot risk that. So is there a lot of saber rattling going on, as they say? Yes. Should we discount it? No. This is a serious issue. For now, it seems to have, you know, appeased the markets, but I don't think this has gone away. I think that we can still, you know, kind of keep this in our coffers and say this risk is still out there. And my opinion is if we see volatility come back down again, which we're probably going to see that today. You said markets are rallying. Hang Seng was up, I think, pretty big last night. I think you still got to buy some protection in this market when volatility is cheap. There's just too many things. There's just too many geopolitical risks right now that anything at all in a moment's notice can upset this market.
Certainly. Well, House Speaker Nancy Pelosi has said that America should remember their vow to Taiwan. On the flip side, we're seeing China, especially in Fujian, the town across from Taiwan on the mainland, they're rolling in the tanks reportedly. So certainly we're watching those developments. Scott, we'll end it there, but thank you so much. That was Prosper Trading Academy CEO Scott Bauer.